हार्टी वेलकम टू एवरीबडी. चलो तो कल what we were doing capital loss carryovers. Okay, in the chapter I think that is the fourth chapter that we were doing, right? So number 4, that was carryovers. I think I made you right. Okay, you can also put carryovers comma set off and carry forward. Go to the heading carryovers. What did you write? Carryovers, right? Carryovers comma set off and carry forward. Carryovers comma set off and carry forward. So please try to change the heading to that. Yeah, very interesting topic. I think yesterday we did installment sales example, right? And then we understood what is a related party transaction. We took the example of Ram, Lakshman and Ravan. Then we understood the special situations of employer-employee transaction and then inter-spousal transfer also. And then we went on to carry forward of losses. There we understood what is holding period, where it is reported, schedule D, and then form 8949, and then capital loss, how is it treated? Yeah, capital loss, how it is treated. It must be first set off against the capital gain, and then remaining, if any, must be set off against the ordinary income to the extent of $3,000 and then $1,500 in case of MFS. And then I think we wrote about the long-term capital gain tax rates, 28%, 25%, 20% and all. Then I think that's where we stopped. Yeah. Okay. Now, yeah, Santosh, जिंदगी के साथ भी और जिंदगी के बाद भी. Yeah. Okay. So sale of home. We will take up the next topic. So go to a fresh page. We are still in section 4 only. Okay, section 4 only. We will take sale of main home. Sale of home. You just put heading sale of home. Sale of. Painful, right? Home for sale, right? Tararampam. Is that Tararampam movie, Dipti? That's a nice movie. Probably as a couple, if you're going through some challenges, financial challenges, I think you should watch that movie, Tararampam. So, sale of home. Selling the main home. I think when we were doing exempt incomes, we did a small topic, right? In the exempt incomes, we said that any capital gain or any gain that arises, on sale of principal residence, losses are not claimable. Loss on sale of personal property is not claimable, but any gain that arises out of personal property, that is certainly taxable. Okay, but again, there is a limit to that. There is a limit to that. I think we wrote that limit. Can you just go to exempt incomes and just check chapter 6? Sure. Okay. So the point that we are trying to make here is, in the exempt incomes, did we write that point? Which point? Which point? Third point. Please read it.
Gain on sale of main home up to $50,000 is exempt.
Gain on sale of main home, right? Exempt incomes was chapter 6. In the same section 2, chapter 6, third point, right?
And $500,000 for
$500,000 in case of MFJ. So this is that exclusion limit. Okay. Now, when you sell the home, is it always exempt? Is the gain always exempt? Okay. आप बोल दिए, say whenever you sell a home, you can expect a gain or a loss. Okay. Now, when it is loss, government said, shut up. You can't claim the loss. Now, when it is gain, it says you have to pay tax. Now, when there is gain, then we understood that up to $250,000 for other status, and if they are married and filing jointly, $500,000 is exempt. Now, for $500,000 that is exempt. That is exempt. When is that exempt? Are there any conditions? Yes, there are two conditions to it. It is exempt when two conditions are satisfied. What is that? One is the ownership test. Ownership test, and the other one is use test. The other one is use test. Now, what does this ownership test mean? Ownership test means the person must be the owner of the home. He must have the title of the property. I mean, everything must be registered on his name. It need not be that he has fully cleared the debt or the loan on that house or the mortgage on that house. The house may still be on mortgage, but as long as he owns the title, he is still the owner of the property. So the first test is the taxpayer or the spouse. Anybody must be the owner of the property. Next one, use test. What they say is the taxpayer must have used this home as main home for at least 2 out of 5 years. He must have used this for at least 2 out of 5 years. Now, ownership also, it could be own or mortgage. गाड़ी मकान जो भी है लोन पे भी लिए ओनर आप ही है ना, right? Now, use test, out of 5 years, you must have used the house as main home for at least 2 years out of the 5 years before the date of sale. Getting it? And the only condition they say is you cannot claim another exclusion. And what they are saying, I mean, you cannot be doing selling every 1 year, 2 year or something like that. So what they say is you cannot claim the exclusion if you have already excluded the gain from another home within 2 years. Within 2 years from the last date of date, within 2 years from the current date of sale. Okay, probably when you are writing this, it will make more sense to you. So I would request you to just drop a chart like this. Uske niche se we will start writing the notes. Okay, so please write sale of home. Probably you make this as sale of home. 2 parts: gain, loss. Gain, loss. Gain and then loss. Okay, and then what you do is okay, just put a green color right and a red color. I mean, it means not deductible. Not deductible. It means this is taxable. Any loss, not deductible. If you want in brackets, you write. If you want. Okay. Gains, taxable. Loss, not deductible. Gains, taxable. Loss, not deductible. Then gain, divided into 2 parts. Ownership test, use test. Ownership test, and then use test. Brackets you write own or mortgage. Own or mortgage. Then here you write 2 out of 5 years. 2 out of 5 years. Okay, Santosh has asked this question. Until ownership changes, I mean, can we register another name to whom it is sold? I mean, at the time of sale, you must be the owner of the house. Simple. Okay. Fine. Okay. Let's write the points. इसके नीचे let's write the points. Shall we give a title to this? So, इसके नीचे you just give the title Sale of home exclusion. Okay, exclusion. Sale of home exclusion. Exclude यानी निकाल दो. Sale of home exclusion. Yeah. First point. Bullets. If TP has capital gains, if TP has capital gains from the sale of green color main home, green color main home, regular color, then he can exclude then we can exclude green color up to $250,000. Up to $250,000. Yeah, then you can exclude green color up to $250,000. Regular color, or in brackets you can write. Up to $500,000. Again, green color or a different one, whatever you feel comfortable. Up to $500,000 if MFJ. Same thing what we wrote earlier. Next point, leave one line, write neatly. Okay, most of the times one question is expected on this topic. Very easy, but it is expected. The TP must attach, the TP must meet both, probably red color you can write, ownership test, then regular color, and use test, red color. Ownership test and use test. Next, in that sub bullet points, the TP must be sub bullet point, the TP must be the owner of the house. The TP must be the owner of the house. The TP must be the owner of the house. Comma, red color, and the TP must have used this home, sub bullet points only. The TP must have used this home as green color main home main home regular color for now red color at least 2 out of 5 years. At least 2 out of 5 years. The TP must have used this home as main home for red color at least 2 out of 5 years, regular color before the green color date of sale. We are using so many colors for a single line so that we don't forget it in the examination. Don't make a mistake on this, okay? One question is certainly expected normally. This one, apple, yeah. Okay, next one. Next one, leave one line. Third point, main point, not sub point, main point. The TP, red color, cannot regular color claim exclusion if he has already excluded the gain, if he has already excluded the gain from red color another main home, red color within 2 years. Within 2 years. Regular color from the date of sale. From the date of sale. Please read through what you have written. What did we write? The TP cannot claim exclusion of what? 250,000 or 500,000 if he has already excluded the gain from another home within 2 years from the date of sale. So, the government is saying you cannot, already the divorce rates are high, right? Marry him, marry her, get the house, sell the house. This doesn't go like that. Anyways, maybe both are not interrelated, but I don't know why they have put this, but still that's a law. So 2 out of 5 years, remember that 2 out of 5 years is the use test, and there must not be any sale of home wherein he has claimed an exclusion again within 2 years before the date of sale. Just remember these 3 points, only 3 points, okay? Then last one, fourth one. This gain, last one, fourth one. This gain is reported in. This gain is reported in Schedule D. This gain is reported in Schedule D. Schedule D, brackets form 1040, brackets form 1040, and the computation is done. And the computation is done on form 8949. And the computation is done on form 8949. Clear? Chalo. So, people, we have done 4 sections in this chapter, okay? In the chapter of capital gains, right? Capital gains, I think, is the 11th chapter. Can we just coolly, go over this chapter once? I will share you the slides on this chapter soon. Let's just go over this chapter once, okay? Come to chapter 11, okay? Capital gains. Just a quick review what we have written. So we are in the chapter of capital gains. Okay, fine. Let's take this. Okay, we are in the chapter of capital gains. First one, we did types of property. Okay, types of property we divided into two: real and then personal. Then in personal we saw tangible and then intangible, right? And then we did basis. Number 2 was basis. There we saw, what basis includes, excludes. Then we wrote a note on the investment property yesterday. And we wrote that loss on sale of personal property is not deductible. Then in that we also understood, what are settlement and closing costs. We wrote includes and excludes. Then we went on to understand adjusted basis, right? Very interesting it was. The word adjusted has 8 letters and we saw 8 situations, right? Purchase, then, exchange for another asset, exchange for services rendered, inheritance, converting a personal asset into a business asset, right? Computation of basis in case of purchase, then in case of exchange of another asset, in case of exchange of services rendered, in case of inheritance, in case of converting a personal asset into a business asset, then in case of gifts. That chart is amazing, right? And I think I told you in non-depreciable property, the last one, no gain or loss, then arrow mark down, SP, right? There the basis becomes the SP, the selling price, and hence there is no gain or no loss. Then we wrote a case study there. If you received 10 acres of land from your uncle, what if it is sold for 200,000? What if it is sold for 80,000? Then sold for 110,000. I think we did that. Then we did the 7th one, computation of basis in case of installment sale, how we use the gross profit percentage, right? Then we divided the installment sale into 2 parts, gain, loss. Then first year of sale, you can either report everything in the first year of sale or you can report everything, each year of sale using the gross profit method. Then we did the example, right? The case study on the exercise I have given you, right? That Ram sold, right? A contract, Ram Lakshman. Anyway, I think he took a down payment of 50,000 and every year 30,000 was being paid in installment for the next 5 years, right? So we did that. And then 8th one, computation of basis in case of related party transactions. We understood who is a related party, what is the tax treatment of gain or loss, computation of related party gain or loss. Then computation of gain or loss on sale to a unrelated party. Then how about special situations? I'm just loving the notes here. Please preserve the notes and very humble request, please don't share the notes with anybody. You put effort, I put effort. Poverty or lack of money should not be a reason. Okay, I didn't go to any academy and learn this. Very humbly I have to tell you, but I took a long time maybe to gain this little expertise to teach you or gain this experience. I think 15 years, 16 years is a very long time. Okay, so if you are learning that 16 years just like that, I think I have also paid a price for it. And for those of you who do not know why Karna forgot which tool to use, which arrow to use in Mahabharata, just try to Google what he did with his guru. Yeah. In the war field, he forgot which tool to use. Unless you actively participate and you're active with the teacher, with your leader or manager, it's difficult to flourish wherever you are planted. Yeah. Whether it's manager or your boss or supervisor, you have to first understand the heart of that leader. Now, it doesn't mean that every crappy thing he says, we got to do it. No. If he's teaching you crap, just get lost. Move out from that place. Move out to the right boss. But when the right boss, right leader, right teacher is telling you something and you try to deviate from that, whatever be the era, whether it is the ancient era, mythological era, or the current era, things will not come to pass. Okay? So please don't breach. Yeah? Okay, then we did section 4, set off, carry forward, and then carry over of losses. And we wrote some wonderful points there. I think this we revised, and now we have done sale of main home exclusion. Yeah, amazing, very good. The next topic is going to be a very interesting topic. Sir, every topic you say it is interesting. क्या करें? हमें तो US taxation से मोहब्बत हो गया भाई. And the best part is उसको भी हमसे मोहब्बत है. Okay, cool. Very good, guys. You are sharing notes and all. Nice. अच्छा सीखना यार, अच्छा सीखना. Share the knowledge. Yeah. You're learning, right? Ask experienced people, they will tell you, how dry these topics are. How much effort they have put at their workplace, to understand all these things. तो ऐसे ही नहीं दे देना यार किसी को भी. Have you watched that movie Joker ka? If you are good at something, do not do it for free, right? Very famous quote, the Batman and the Joker. Yeah. I mean, I just like that quote. If you are good at something, never do it for free. Yeah. Helping the poor and the needy is certainly as human, or whether you are a Salman Khan fan or not, being human or a human being, you have to be human to the mankind. Okay. You don't need a celebrity to do your basic responsibility of serving mankind. Okay. But this is knowledge, education. I have to feed my team, and my students have to be well placed, working in decent organization and stand tall in the industry. So these things must not be breached. Okay, and anything like that will not last also. Okay, so we will go to a fresh page, number 5. Okay, take a fresh page. Very interesting topic. Number 5, property used in trade or business. Go to a fresh page and do it. Yeah, number 5, property used in trade or business. Property used in. Okay, Abdul Halim has asked a question. If 2 out of 5 year conditions, then again after 2 years, how he can fulfill 2 out of 5 years condition? Maybe again he has to wait 5 years and stay for 2 years in the second home for 2 out of 5 years condition. Yes. Say. Okay, they say no audio. Please check. Yeah, it is audible, Vishnu. Please check. It's audible. You may have to check your mic or something. I mean, your sound settings. Yeah, it's audible. Yeah. What is that? No, we are in capital gains only. We are in capital gains only. We did 4 sections. Types of property, then we did basis, adjusted basis, then we did set off, carry forward, and then carryovers. Now we are doing property used in trade or business. Okay. Dry topic. Okay. But we will fry the topic. Okay. इसमें you will have some properties called as section 1231 property, 1245 property, 1250 property and all. So I would want you to take notes in a table format. Okay, तो क्या करें आप notes को 4 equal columns में divide करें आप. Okay, divide your draw a table 4 equal columns. Okay, 4 equal columns. Okay, in red we will try to put the headings. Okay, description, write in red. Okay, description, then section 1231 property, description, section 1231 property, then section 1245 property, then section 1250 property. 1250 property. Just put a table. Yeah. Okay. So, इसमें again this side we will try to write in red only. Okay. Red या green में लिखते हैं, green में. Okay. This side we will try to write in green. Okay. First one. Nature of property. Nature of property. Nature of property. Once you write, it will be there for lifetime. Okay, and then as you go detailed, you can keep adding the notes and all. Nature of property. Sure. यहाँ पे लिखते हैं. Once we will, after we write, we will try to understand this. Okay. Here in section 1231, all red color, real, regular color, or depreciable property, used in business. And buildings, machinery, all these things. I'll give you the examples also. All real or depreciable property used in business. Next, section 1245. Depreciable, red color, personal. Depreciable, red color, personal. Regular color, property, brackets, both tangible and intangible. Brackets, both tangible and intangible. Next, section 1250. 1250. Depreciable real property. Depreciable real property. Practically all these properties are alike actually. Sure. Leave one line. Number two. Examples of property. Examples of property. Number two, examples of property. लिखते हैं यहाँ. In section 1231, apartment buildings, parking lots, equipments, structures, etc. Next, section 1245. Manufacturing or production equipment. Just understand as you are writing. Everything is self-explanatory. Manufacturing or production equipment. Based on this nature, they have just given the name. Section 1231, 1245, 1250 is given the name. Manufacturing or production equipment. Next, comma. Goodwill, comma, livestock, comma, patents, etc. Now, last one, building or structural component. Last one, building or structural component. Now, 1250 property is building or structural component. Next, leave one line, write neatly, okay, leave one line. Now, third one. Holding period. Property must be held for red color more than 1 year. Must be held for more than 1 year. Must be held for more than 1 year. Next one, 1245. Property is considered placed in service. Property is considered placed in service. Is considered placed in service when it is ready and available for use. When it is ready and available for use. hyphen you put write in green color 1 year or less. 1 year or less. Stay safe at home. Yeah. Lockdown is relaxed, not COVID. Yeah. Still we see so many cases. The other day I was seeing a meme of Brahmanandam. So he was writing, I mean, the meme was something like this, it said, people are behaving as if there is no COVID-19, on the roads, and they are behaving like that and going very freely. And the news shows that, no one is going to survive. So, don't know. Just take care of yourself. Okay? Chalo, next one. Last one. Number 4. 1250 property also same. Property must be held for more than 1 year. Same what you wrote for 1231, please write for 1250 also. Okay, see, whenever it comes to what do you say, 1231 or 1245 or 1250 property, one thing that you have to keep in mind is the treatment of gain or loss. How is the gain and then how is the loss? How the gain will be treated and how the loss will be treated. Most of the cases, 1231, 1245, 1250, it's almost, the same, So, we'll just take one example and rest all, you must be able to do, and we will take the scenarios in that, okay. Section 1231, 1245 and then 1250, treatment of gain or loss, okay. So, a table ke niche, probably you can go to a different page also. Did you write one page, half page, quarter page in that? Okay, 2/3 is taken. So, go to a fresh page. That's all, just 3 points. Did I say property does not include? 4th one? No. These were 3, right? Nature of property, examples of property, then holding period. Or did I not say 4th one? Okay, sorry. 4th one, please write. Property does not include. Property, red color, does not include. Property, red color, does not include. Okay, first one, personal use property and inventory. Personal use property and inventory. Buildings or structural components. The next one, buildings or structural components. 1245 is buildings or structural components. Buildings or structural components. And last one, depreciable personal property. Depreciable personal property. Okay. Chalo, tax treatment of gain or loss. Go to a fresh page and put the heading tax treatment of gain or loss on, probably red color you can write, tax treatment of gain or loss on, red color, section 1231, on, red color, section 1231, 1245 and 1250. 1231, 1245 and then 1250. Yeah, okay. So, all these, the tax treatment is normally the same. So, let's try to understand this with an example. It's a, very interesting topic. Okay. So what we will do is in green color, so you put the heading, tax treatment of gain or loss in a section 1231, 1245 and 1250 property. In this, we will try to put the heading, okay. Number 1, okay. Number 1, if sold for gain or sold for gain, if sold for gain. If sold for gain. Okay, so sold for gain. So in this, let's take a case study, okay, how it is computed. Let's say a building or asset is there, okay, building or asset is there. Let's write points, okay, let's write points in this. Asset, building. Next, cost 100K. Cost 100K. Next, depreciation 40K. 40K. Next, adjusted basis. Adjusted basis, adjusted basis is nothing but written down value, right? 100 minus 40. So this is 60K. Next, this one you try to write in green. Selling price 150K. Selling price 150K. 150K. So this is the case study, okay? Yeah, okay. Now see, on the face of it, what is the gain? On the face of it, what is the gain? You see, the selling price is 150. The written down value, the current value, the adjusted basis of that is 60K. It means what? 60, just this piece, right? 60 and then 150K, right? So what does that mean? The gain, you see, the gain here is 90K, right? They call this as recognized gain. Yesterday we were writing, right? Okay. This will be called as recognized gain. Recognized gain. Okay. So this is 90K. Now what happens here is, whenever it's a section 1231 case or a section 1245 or a section 1250 property, what they say is any gain must be split into ordinary income and long-term capital gain. Okay, so this 90K, whatever you see, okay, this 90K, anyways, you have written this, right? Okay. The way we will try to write is, case 1 you have written, right? Case 1, if sold for
Gain.
If sold for gain, and in that all these points are there, okay. Now in this red color we will write step 1, how we wrote earlier, just try to write step 1, computation of net gain. Computation of net gain. Okay, in that regular color A. SP, selling price. Computation of net gain. Okay, A, selling price. Selling price 150K. Or 150,000 also you can write, 150,000. Next B. B, red color, less. Less. Adjusted basis. Less. Adjusted basis. $60K. $60K. C. C. Net gain. C. Net gain. Net gain is equal to A minus B. Net gain is equal to A minus B. A minus B. 90K. 90K. $90K. Next, step 2. Step 2. Step 2. Computation of ordinary income. Step 2. Computation of ordinary income and long-term gain. Okay. A, regular color, A. So for what did we do? First one, step 1, we did computation of net gain. Okay. What is the net gain formula? On the face of it, written down value. Now it is 60K. Okay. Selling price is 150K. So the net gain is 90K. Now we are going to apportion this net gain. Okay. Apportion this net gain. That's the beauty of the property that is used in trade or business. How it will be calculated between ordinary income and then long-term gain. Chalo. So step 2, computation of ordinary income and then long-term capital gain. Chalo. A. Ordinary income. Ordinary income. You have written ordinary income. Let's say if you have written ordinary income, you write here in brackets, green color, least of, okay, we'll say net gain or least of net gain or section or accumulated depreciation, least of net gain or accumulated depreciation. In our case, the accumulated depreciation was 40K. So the least of this. Okay. So what is the ordinary income here? What is the ordinary income? Ordinary income is the least of net gain or accumulated depreciation. So what is the answer? 40k. Okay, so ordinary income you write 40k. Is that clear? Yeah, all that we are trying to do now is that 90k that we got in step 1, we are just trying to divide it between ordinary income and then net gain. I mean a section 1231 gain. Okay, now B, section 1231 long term gain is equal to net gain minus ordinary income is equal to net gain minus ordinary income. Net gain minus ordinary income. Net gain minus ordinary income. So just calculate what is net gain? 90k minus ordinary income 40k. Answer 50k. So total gain is again 90k. Right? The same 90k we are just dividing it into 2. Yeah, just go through that example once. Okay, is this clear? Now, so this was case 1. Okay. Now let's go to case 2. So number 1, I think case 1 you wrote sold for gain. Okay. Now we will go to a different page, probably in a different page you write. Okay. Number 2, put the heading in red color, you put sold for loss. If sold for loss, sold for loss. See, case study is the same. Just write the same case study. Only thing, selling price you make it 50k. Selling price, there we took 150,000, right? Now यहाँ पे you make the sale price 50k. So what will you write? Building, asset, building, asset, building. Same thing what you wrote there, asset, building, cost 100k. Depreciation 40k. Depreciation 40k. Adjusted basis 60k. Selling price 50k. Selling price 50k. Now, tell me what you got. So step 1, if you see, do you see a gain or a loss here?
Yes.
Huh? You see a loss here. Okay. So step 1, computation of net loss. Red color heading. Computation of net loss. Computation of net loss. A. Same, what you wrote there. Selling price. Then B, less adjusted basis. Selling price, right? Yeah. B, less adjusted basis 60,000. Now there you wrote net gain. Net gain is nothing but recognized gain. Okay. So here it will be net loss. Net loss. So you write brackets 10,000. So step 1 is brackets A minus B. Yeah. So what is the net amount you get? $10,000 in brackets. It means it is a loss. So we understood that when you get a gain, okay, with this example, I'm sure we can make this statement. Okay. Okay, I park this here. Now, see, with this example, we can make a statement that when you get a net gain in a, okay, let's say 1231, okay, transactions, 1231 transactions, you get a net gain and a net loss, let's say, okay. So when you get a net gain, what are you doing? You are trying to apportion between ordinary income and then a long-term capital gain. Now, when you get a net loss, what they say is claim fully as ordinary loss. Claim fully as ordinary loss. No 3K limit. You remember that 3000 limit that we have put? 3000 limit, right? We just wrote that in set of carry forward and then carry over of losses, right? So that 3000 limit is put there. So that is not something that you must be worried about. Now in this case, if you see the net loss is 10,000, so what they say is you can fully claim that 10,000. There is no 3,000 limit that you claim now and then you carry forward. It's a property that is for the individuals. Now this is a property that is used in the business. 1231, 1245 or then 1250. Okay. Chal. Step 2. Okay, step 1, computation of net loss. Is it clear? I'll give you time to write this chart. Okay, after you write this, then you take this on a fresh page. Summary we will write. Step 2. We got the loss, but now you just have to claim that. Step 2, what you will write? Treatment of net loss. Step 2, we are not computing anything. Now there is nothing to compute now. Okay, you just write treatment of net loss. Treatment of net loss. A. Loss can be fully adjusted. The loss can be fully adjusted against. The loss can be fully adjusted against green color, you write ordinary income. The loss can be fully adjusted against ordinary income. Next, B. Fully also you try to underline in green. B. In green color, you write the 3,000 set off rule, the $3,000, the $3,000 limit, you can say, the $3,000 limit, regular color, of set off rules. Set off rules is green color, not applicable. green color is not applicable. Okay, I think you have written that. Okay, good. See both the examples. Now you look at this. Okay, watch your notes, watch this also. So in a section 1231 property, or things like that, you get either a net gain or a net loss. So when you get a net gain, you got to apportion that net gain between two, ordinary income and then long-term capital gain. Now, how do you do the ordinary income? Ordinary income, the formula is net gain or depreciation, whichever is less, right? Lesser of net gain or accumulated depreciation. Lesser of or lower of, least of, right? Net gain or accumulated depreciation, whichever is less. And then remaining balance will be long-term capital gain. This will be the balance. Now, in case of a net loss, claim fully as ordinary loss against ordinary income. No 3K rule or no 3K limit. So, probably this one you can write in green and this you write in red. Okay? Sure. Do it. What is that? Personal losses you cannot claim because this is a property used in trade or business. This is how the treatment is done. Okay, so in the next page, go to a fresh page and put this chart. Summary of, put the heading, summary of section 1231 or 1245 or 1250 transactions. Summary of section 1231 or 1245 or 1250 transactions. Now you put this chart, okay? Now you put this chart. Formula will be the same. You can also, if you want, instead of this, if you want, you can make it property used, or that's okay. You keep it the way it is. The 1231 or 1245 or 1250 transactions. I mean, the essence will be the same. Transaction. When we go to business paper, we will learn, in more depth. As of now, you just try to learn like this. Net gain, net loss. Okay, Chandra asked a question. Sir, in section 1245 property, how come the nature of property is personal when it is used for manufacturing or production? Now, it could be livestock also. I mean, it could be a milk trader, having cows. It could be some tangawala. Having horses, so that is also possible. Okay, I hope you have understood the section 1245, 1231, 1250 property. Okay, the treatment of gain or loss is something that is important here, and please pay attention to that. Whenever you are doing that, you should expect questions from that only. And so what is the heading that we have given for this section 1231, 12 property used in business, right? No, for this sub-chapter, what is the heading we give? Number
Property used in trade or business.
Property used in trade or business, number
5.
Number 5. Okay, next one we will write, we will put an heading called like kind exchanges. No, in that only, just go to a fresh page. Chota topics now. Small topics. Okay. It is also called, section 31, 1031 exchange. So, like kind exchange. Just put the heading like kind exchange. Exchanging a home for a home. I mean, like kind exchange. You give a car, you get a car. You give a home, you give a home. Okay, so just put a small heading, some few points we will write in this. These are all some miscellaneous topics, okay, in the business. So, okay, हमारे पास फ्रिज है, okay, आप ले जाओ, okay, आपके पास सोफा है, okay, आप दे दो. I mean, any business property, or we have our office in Bangalore, okay, we have our office in Chennai, okay, fine. Can we thought we will move there, so you're just trying to shift the offices or something like that. Chalo, put the heading like kind exchange. Red color में लिखना like kind exchange. Brackets you write section 1031. Section 1031. Section 1031. Section 1031. Okay. So let's read. First point. First point. If the TP, first point. If the TP exchanges, if the TP exchanges, if the TP exchanges his the way exchanges his which color, or should we write regular? We'll write regular only. Real property, real property, real property, comma, business property, comma, business property, or investments, or investments, or investments. Okay, so what you do, underline these first letters R, underline R, real property, then underline B, business property, then underline I, investments. In brackets you write RBI. Just for examination purpose, 1031 exchanges, RBI. Just remember that. Means what? If a TP exchanges his real property or business or investment property for another, right, continue, for another RBI property, for another RBI, yeah, that's okay, right, RBI, for another RBI property, for another RBI property, comma, it is called section 1031 exchange. It is called section 1031 exchange. Next point. Okay, section 1031 exchange. Next point. The TP recognize green color, no gain or loss. TP recognize no gain or loss, regular color, until the property is sold. Until the property is sold. See, this is something like, our related party sale. No gain or loss is recognized unless it is sold to a third party, right? Unless it is sold to a third party. And brothers have exchanged, just like how they exchange shirts in the childhood or the clothes. We are selling it, okay? It's going from, like what Santosh Ping, intercompany transfer also. It's going from one place to another. Or maybe it's a business relationship. It's just an exchange of property. I mean, we need not show it in books. We are not selling it somewhere. Just apna item wahan pe laga liya, wahan ka item la liya. That's all, okay? Maybe you need a scanner, printer, scanner, copier. And maybe this person needs a sofa or something. You said, okay, your place, the clients are visiting you, you need a proper sofa or something. So maybe the clients will come and say, okay, at my place, I need to take the photocopies and scan the bills and all. So probably we'll just exchange this. Any real property, business property or investment property. So no gain or loss. You're just given it. I mean, when you give your bike also, or your car or something to a friend, okay, I have to go a long way. There's sudden emergency. You give your bike or car to somebody. Now, do you think you have to recognize any gain or loss on that? I mean, you're not sold it to him. If you're selling it to your friend for some price, second-hand bike or second-hand car or something, then you have to realize the gain or loss. Now, it's just an exchange. You're just helping him. And in this case, it's just an exchange. So they say no gain or loss until the property is sold. So maybe sold, you should underline in red. Okay. No gain or loss until it is sold. Next point. The TP may recognize a gain. The TP may recognize a gain to the extent of cash, to the extent of cash or FMV of, to the extent of cash or FMV of the property received. FMV of the property received. See, in real business, exchange of an asset for another asset, I mean, accountants, chartered accountants, you must also be watching. How many of them, record it in books? Maybe you write off over a period of time, but now this is, you recognize again, to the extent of cash, or if you have received any property in exchange for that, and I completely sold, or we have purchased it. Okay, you have the written documentation for that and all. Like adoption. Adoption is different, leaving kids in the relative's house when you go for a vacation or some important meeting, that is different. Okay, adoption is different and leaving kids is different. So, next. That's all. Okay, why business property will come in personal tax return instead of corporate taxes? Okay, business property will come in this because you may also have business as an individual. Abhi dekhiye, independent contractors, right? They will get 1099 miscellaneous. Independent contractors will get 1099 miscellaneous. Now, they have to report that on Schedule C, business income, that we will be doing next. After capital gains, we will be doing business income. So that gets reported on the business income. Okay, so in the business, if you are using any property, utna nahi aata, lekin fir bhi, in case there is a sale or disposition of that, this is how you treat it. Okay, next. Okay, another thing that you have to know is sometimes the word boot is used. Boot, B-O-O-T, okay. Now, boot does not mean, your boots, your shoes or something like that. Boot also means, the property, money or anything that you receive. It is also like a sale consideration, okay. So, probably, can you go to adjusted basis? Adjusted basis. The first one that we wrote somewhere. Computation in case of exchange for another asset. You see, FMV of the new asset, right? FMV of the new asset at the time of exchange. Then B, add payments made and less any payments received. Okay, all these three. And then upar B, you see A, you wrote, computation of basis in case of purchase. There also you wrote cash paid for the property, add debt taken, assumed by the taxpayer, then FMV of the property or services given in exchange. All this together, that ABC or this ABC, all these are called boot. So when you see, boot received, boot exchanged and all that, it means the sale consideration. Okay. Just to give you the meaning of boot. Okay. Then I think I told you about involuntary conversion, right? Involuntary conversion means a taxpayer may receive a replacement property. I mean, because of casualty or theft. I think I explained to you, yesterday or day before. Because of casualty or theft, he lost something, and that is being replaced with some other, property. That is called involuntary conversion. Okay. What is this? The depreciation should show in the new place of establishment of the property. Wherever the asset is, whoever owns the asset, that's where the depreciation must be claimed. So that's on the involuntary conversion. Okay. Did I show you this form 4797? Form 4797, sale of business property. I think I showed you 8949 also, right? Somewhere we wrote reporting. I think I asked you to write it is reported on Schedule D, and then I think in section 4, set off and carry forward, I asked you to write, I guess, reporting. Yeah, in set off and carry forward yesterday, I think we wrote this capital loss carryovers, comma, set off, and section 4, in this general notes. First point was on holding period with 3 subpoints, and then next point we wrote any capital gain or loss is reported on form 1040 through calculations in Schedule D, that is non-investment property. Then form 8949 investment property, non-business bad debts, and then involuntary conversions. Okay, so in the section 1231 you can just write that whatever we have discussed, 1231 property, all these things, it gets sale of any business property, it gets reported on form 4797. Just put a note. In this chapter we have just written property used in trade or business. You have put that summary, right? Summary. Just a second. You put this summary, right, a while ago. Yeah. Summary, you said section 1231, 1245, 1250 transaction, net gain and all. Just यहाँ पे एक note लिख लेना. Okay, just put a note here. Just put a note. Form 4797. Form 4797 reports the following sales of a business property. The following sales of a business property. Colon. First point. Just take right marna. Sale or exchange of property. Yeah, उसमें sub bullet point. Sale or exchange of property. Disposition of non-capital assets. Next, disposition of capital assets. Next, disposition of capital assets. Red color, not reported. Regular color, on Schedule D. Next sub-bullet point, involuntary conversions. involuntary conversions. Involuntary conversions. See now, another one that when we were doing this, ordinary income, we said least of, right? Least of net gains or accumulated depreciation. We put that chart above, right? This accumulated depreciation is what is reported as ordinary income. See the chart. You see the chart. This accumulated depreciation is what is reported as ordinary income. So that they also call it as recapture of depreciation. What is that? A recapture of depreciation. The same income, the same depreciation that was claimed. Now that 90k, see that 90k income, it is split between two, ordinary income and net gain. I'm sure you have understood this. Now that depreciation piece is called recapture of depreciation. Okay, so in this, the next point, we wrote 4 points, right? 4 points we wrote, involuntary conversions, and then the next sub bullet point you write recapture of depreciation. Recapture of depreciation. Recapture. Capture, capture, recapture. Recapture of depreciation. So it basically reports, the sale of capital assets in this 1231, 1245, 1250 property only. Okay. So this was section 5. Now we will do small section, section 6. Okay. Section 6. So go to a fresh page. Please write section 6. Number 6. Stocks, shares and options. Stocks, shares and options. After like kind exchanges, just go to a fresh page. Number 6. So first section we did in the chapter of capital gains. First we did types of property, then we did basis, then we did adjusted basis, then we did set off, carry forward, carryover of losses, and then we did property used in trade or business. Now we are doing 6th one, stock, shares, options. थोड़ा बड़ा है लेकिन you are able to understand everything, right? You see the other materials also, online materials, they have not put the content like this. We are going as per 1040, so it is easy to understand. Yeah. Stocks, shares and options. Stocks, shares and options. Okay, let's write. See, even in a stock, you will have basis, okay, and cost, right? You purchase shares or stock or something, you will have the points. I mean, right? What is the price and all these things, right? So even there, you take the purchase price and then you are incurring any money on recording fees, transfer fees. The stock can be transferred, share transfer, stock transfers. You must have read it, in your graduation or what. So even if you have not read it, that's absolutely fine. You are transferring the shares from one person to another. Maybe, you have to incur some transfer fees, or when you're registering the shares in the name of somebody, you have to pay the recording fees or any other commission or something like that. So all these are added to the basis. Basis is cost. The cost price of the stock, this gets added. Okay. Chalo. So let's write the first point. First point, general notes. We will put the heading stock basis. Put the heading stock basis. Stock basis. First point. The basis of stocks or bonds. The basis of stocks or bonds. The basis of stocks or bonds is generally, just try to understand that. The basis of stocks or bonds is generally colon first sub bullet point purchase price first sub bullet point purchase price. Okay, next add commissions, or recording or transfer fees. Add commissions or recording or transfer fees. Okay, this is the basis. Okay, commissions or recording or then transfer fees, that's the basis. Then leave one line. So this was the main point what you wrote. Abhi next point, leave one line. The basis of, see, sometimes you have purchased 1,000 shares. Now you may get 1,000 shares extra from the company in the form of dividend or stock split or whatever. Okay, that we will discuss now. Okay, write the next one. The basis of additional stock. The basis of additional stock received by the taxpayer. The basis of additional stock received by the taxpayer is colon first point, first sub bullet point. Understand what you are writing. Okay, the basis of additional stock. Probably you can just underline additional stock in green or something. Okay, the basis of additional stock received by the taxpayer. Is first sub bullet point. The adjusted basis of first sub bullet point. The adjusted basis of old stock. The adjusted basis of old stock allocated among the new number of shares. Adjusted basis of old stock allocated among the new number of shares. Next point. This situation normally comes in case of colon सब बुलेट में फिर एक सब बुलेट. Okay, it normally comes again a sub bullet. Okay, non-taxable stock dividend comma or next sub bullet point, stock split. Okay. See, what is this non-taxable stock? Even in our T-Day sessions, we were doing some MCQs on this, okay, non-taxable dividend and all that. So let's say somebody had 1,000 shares, okay, 1,000 shares at the rate of $10 per share. So this is $10,000 value, okay. So this is the purchase price, we can say, or is investment or basis, whatever, okay. Now this person got a dividend at the rate of 10%. So what happens? 10,000 ka 1,000. But this gentleman says, no, I don't want dividend. You give me the shares. So non-taxable stock dividend means what? He is getting additional shares. $1,000 का पैसे नहीं चाहिए, लेकिन मुझे शेयर्स दे दो. यानी $1,000 आने के लिए क्या करना? अभी $10 है तो उसको और 100 शेयर्स दे रहे. The same, he is getting 100 more shares. Now his total basis in the company is equal to 1,000 plus 100, 1,100 shares. Clear? So this is called non-taxable stock dividend. So this is nothing but additional stock. This is getting non-taxable is nothing but additional stock. So can you please write as example 1? Example 1, okay, non-taxable stock dividend, and just scribble this. The way you should try to write, let me give you notes here also, okay. Example 1, non-taxable stock dividend. Write it like this, okay, points में लिखना. First point, shares at the rate of $10 each. Shares at the rate of $10 each for 1,000 shares. Shares at the rate of $10 each for 1,000 shares is equal to $10,000. Is equal to $10,000. Next line, dot, okay, point. Dividend at the rate of 10%. Dividend at the rate of 10%. Brackets, $10,000 into 10%. Into 10%, brackets closed, is equal to $1,000. Next point. Next, third point. Additional stock is equal to, next third point, additional stock is equal to $1,000. $1,000 is equal to $1,000 by $10. I mean, that's what it means, right? $1,000 by $10 is equal to 100 shares. Stock is shares, not value, right? So additional stock is equal to $1,000 by $10 is equal to 100 shares. That is the non-taxable stock dividend. non-taxable stock dividend. Okay. The same thing we wrote here. So if you want to write, total stock is equal to 1000 plus 100 is equal to 1100 shares. Total stock. Total stock is equal to 1000 plus 100 is equal to 1100 shares. Okay. Now, example 2. Example 2. Stock split. Example 2. Stock split. So when you are writing, just choose the colors, okay, just to identify it different. Example 1, non-taxable stock dividend. Next, example 2, stock split. Stock split. Okay. This clear so far? Yeah. No. See, it's a stock split. Okay. Now, COVID times. Okay, business is down and layoffs, all these things happening. Okay. So the share value also fell down. Okay. It used to be $10. Now it fell down to $5. Let's say $5. Yeah. My younger daughter says that. Okay, FMV of share, now it falls to $5. Okay. Now, do you think customers will agree you invest 10,000 because the share value now comes to $5? Can you go to customers and say, now you have only 5,000 worth shares? Can you say that? Yeah. I mean, that will create havoc, it will affect the reputation. So many things, get affected. So, what they do a stock split. What do you mean by stock split? Stock split. It means if they have to get 10,000 worth, it means they have to give 2 shares for every 1 share. What is that? 2 shares for every 1 share. It means 1000 shares will become 2000 shares. So then you multiply $5 per share, it will be 10,000. So this ratio, the stock split ratio is equal to 2:1. So for every 1 share, they are giving 2 shares. For every 1 share, they get 2 shares. Getting it? So that the amount remains the same. So this is called stock split. Sure. Put the heading example. Example 2, stock split. Chalo, first point. First point, shares at the rate of $10. Shares at the rate of $10 each. Shares at the rate of $10 each for 1000 shares. Is equal to $10,000. Next point you write, FMV falls down. We're just writing it descriptive, okay, little point wise. FMV falls down to $5 each. I mean, you open the notes on any day, any time, you must be able to understand what you have written. That's why I go very elementary. Okay. FMV falls down to $5 each. Next, third bullet point. Stock split ratio. Stock split ratio is equal to 2:1. Stock split ratio is equal to 2:1. Is equal to 1000 shares into 2. 1000 shares into 2 is equal to 2000 shares. Is equal to 2000 shares. Leave one line and write stock split. Stock split. Stock split. Bullet points usme likhna. Just leave one line. What I want you to write is, so you wrote stock split, right? Stock split, okay. Isme the way we will try to write is red color में लिखेंगे. Decreases share value. Decreases share value, and then in green color we write increases number of shares. Increases number of shares. In brackets you write stock here. Here you write basis. Stock split decreases share value, brackets basis, then increases number of shares, brackets stock. Brackets stock. Okay, that's all. That's about non-taxable and then non-taxable stock dividend and then stock split. Okay. In shares, the next important thing is wash sales. Wash sales. People who have worked in US taxation and handled a little medium level files, they know wash sales. Okay. Next, this is the next topic. Okay. Maybe we may have only some 4 points in this. 4 points only in this. Just try to understand that. Okay, Santosh asked, can these be reinvested to cope up the fall in share value? I mean, the investment is still with the company only. It is still with the company. So it means it is invested there only. Yeah. Stock split. 1000 shares became 2000 shares. It's kind of assuring the customers your money is still there. Yeah, there is a fall, but still, we have given you 2000 shares. So tomorrow the market gets better, you will have 2000 shares. It was $10 that time. Tomorrow it may be $20. So at that moment, your value will be 2000 shares into $20, $40,000. I mean, you invested only 10,000, but you're getting $40,000. I mean, it depends on, how you talk to the shareholders. You remember the Gurubai movie? Yeah. He speaks to the shareholders, the Guru movie, Abhishek Bachchan. There are all some entrepreneurial movies, if you understand Hindi, I encourage you to watch such movies. Okay, fine. Next one is wash sale rule. What is it? Which one? Yeah, we are discussing in shared stock only. All these are small topics. small topics. In 6th section only, where we are learning shares, stocks and options, probably you can give them numbering. Okay, first we learnt about what did we learn? First we learnt about stock basis. So that was A, you can say. Okay, A, you can say stock basis. Now B is wash sale rule. Okay, I mean the sub chapters, these are again topics. Wash sale rule. Again, I will take you back to the related party thing. So what happened? Ram, right? Ram, he sells to Lakshman. Okay, and here he gets a loss. They say, shut up, you cannot claim this unless you are selling to a third party, right? Raman. And this is a real, related party transaction or a related party sales. Now, what is wash sale rule? Sir, why are you interlinking both? It's something like that, okay? Wash sale rule, what it says is, if you are in the business of, purchasing and selling the stock, I'll just read it for you. A wash sale rule occurs when the taxpayer sells securities at a loss, and within 30 days before or after the sale, the taxpayer obtains the same securities or rights to acquire identical securities. So, such losses whatsoever are there, they are disallowed. So, what it tries to say is, when you see this diagram here, I am liking these images. Where's the other one? Okay. What it says is, let's look at this example on. Let's say, let me just copy this. Okay, fine. So here you see, consider this as today, okay. Today is what? 12th, okay. So June 12th. So this is June 12th, okay. Oh, 6/12 I wrote it right? Month, date and year. We are in US taxation. We don't write 12/6/2020. We write 6/12, okay. So for ease, let us say instead of 30, let's consider today as, instead of 12, let's consider today as June 30. We are on June 30. Let's understand it is June 30. Today we sold some shares and we got loss. We sold some shares and we got loss. Okay. Now, what the IRS rules are saying, what the wash sale rule, what they say is, if 30 days before, where is that? 30 days before or 30 days after, if you purchase any similar securities, you're not even keeping the stock for 30 days. You're like buying, selling. So they say that loss will be disallowed. Sir, how unfair? Yeah, I got a loss. I'm in need of money. I sold it. Okay, what they say is, add this loss to the basis of the new stock. Now you see, here he purchased 100 shares, let's say, okay, and he sold 100 shares here. In this transaction, he got some loss, some 10,000 or whatsoever loss he got. Okay, so what this is, you cannot claim this 10,000 loss now. That loss, again, you are purchasing some 100 shares. Okay, let's say the 100 shares price is 10,000. 10,000, yeah, 20,000. New company you purchased. To that you add this loss. Add this loss to that and make your new share, make the basis as 30K. So when you are selling this again after 30 days or something like that, that time you claim. Okay, sir, again within 30 days he sells this stock also, again that will be disallowed. You get it? Again that will be disallowed. Again after 30 days when he is purchasing, then it will be added. Okay, to put the long story short, all that it means is in a wash sale, within 30 days before or within 30 days after you purchase identical shares or securities, then that will be disallowed. If you have sold it today, then your next transaction should be after 30 days. After 30 days. No, within 30 days, then it gets disallowed. That loss will be added to the purchase value of the new shares. Okay, chalo, let's write some points here. Wash sale rule. Wash sale rule. First point. A wash sale occurs when the taxpayer sells securities, red color, at a loss. Yeah, I'll answer your queries after I'm done with this, Chandra and Krishna. A wash sale occurs when the taxpayer sells securities, red color, at a loss. Regular color, and green color, within 30 days. Next, within 30 days, again red color, before or after the sale. Within 30 days, write in green color. Next one, no, it's the same point. A wash sale occurs when the taxpayer sells securities, red color, at a loss, regular color, and again green color, within 30 days, again red color, before or after the sale, comma, regular color, the taxpayer obtains or acquires. The taxpayer obtains the same securities or the rights to acquire same securities or the rights to acquire identical securities then such losses are, red color, not deductible. Are not deductible. Next point. Instead, such disallowed loss is green color, added regular color to the cost of new securities, is added to the cost of new securities. is added to the cost of new securities. Next, third one, not that important but still right. Do not include the date of sale. Do not include the date of sale in calculation of 30 days. In calculation of 30 days. Okay, that's all. And when you go to Google, you see so many images also. When you type wash sale rule, you get so many things, 30 days before or 30 days after you purchase something, the loss gets disallowed and all. Wash sale period. So such loss cannot be claimed. Wash sale rule, loss cannot be claimed. Okay, next one. So this was on wash sale rule. Next we have another small topic, red color. Put the heading worthless securities. Worthless securities. Worthless securities. Worthless securities. Okay, so see, the worthless security means, he has some shares in the company and he feels that is waste. It is waste, company is waste, and he relinquishes his rights. He renounces, he gives up all his rights, okay, and he transfers it to somebody. Worthless securities, waste. It's as good as sale. He treats it as worthless and he gives it to somebody. Okay. So on the last day of the year, if he has sold it, assuming that it is completely worthless and he receives no consideration for that, then it is called worthless securities. Okay. Means receiving zero consideration. Yeah. Please write. Worthless securities, first point. Securities that become completely worthless. Securities that become completely worthless. Brackets, black color you can write, including abandoned. Because of this COVID-19, many people are not, when it was a strict lockdown, many people were not on the phones, emails, functioning. Now for them to survive, economy to run, things are up and going, but otherwise. So let's write. Securities that become completely worthless. Brackets, including abandoned, regular color. Are treated green color as if sold. As if sold. Are treated as if sold. Regular color on the last day of the year. As if sold on the last day of the year. यानी वो waste है. And yes, as if it is sold on the last day of the year. Next point. Next point. To claim such loss, the taxpayer must permanently surrender and relinquish, relinquish, and relinquish all rights in the security, and red color, receive no consideration regular color in exchange of it. I mean, you are not able to trade the shares, you feel the stock value is less or something, so you just give it off to somebody. You don't receive any consideration for that, so 0. Okay, that's all. 2 points. Worthless securities, 2 points. Did we write about non-business bad debts somewhere? Hello? Did we write about non-business bad debts? I think somewhere we wrote it can be claimed as a short-term capital loss or something. Okay, just put a small heading. With this, we will be done. Just put a small heading, red color, non-business bad debts. Okay. Okay, Chandra asked, sir, what's the difference between short-term capital gain on shares and wash sales? Okay, I think short-term capital gains we have understood, right, ma? I mean, short-term capital gain, your question itself says, I mean, the people question is the difference between short-term capital gain and then wash sale. Okay, see, in a wash sale, there's a loss. Chandra, in a wash sale, there is a loss that is disallowed. See, what happens? I mean, yesterday also we were discussing installment sales method. We said any gain, we want to defer it. Kadvamle, pay karenge tax. But any deduction we want to claim now. So in wash sale also, there is a loss. So we are tempted to claim the deduction now. We want to claim the deduction now. But the rule says, in that 30 days period, within 30 days from the date of sale, within 30 days before or after, if he is purchasing anything, then such loss is disallowed. We can't allow such loss. That is what the government says. So it is added to the basis of the new stock. Now, short-term capital gain, it's a gain. Just report it. Okay, next one. Sir, can we add the loss to the cost of the new stock of identical securities? Yeah, I think I told you that. Yeah, that loss, wash sale loss, whatever it is there, it will be added to the basis of the new stock. I mean, new shares or securities. Yeah, Krishna says, sir, is it same company? I mean, they said identical shares. I mean, same shares, same type of shares, same class of shares. So it can be same company or it could be same class also. Yeah. Chalo, let's write a small topic. Yeah. I greatly appreciate your patience. Just write the small one. Okay. Non-business bad debts. I mean, that's the flow, Mamali. We will be missing that flow. We'll miss that flow again. Red color, non-business bad debts. See, non-business bad debts means what? You give money to somebody, right? And they did not return or something like that. You gave a debt. You gave a debt. It was not a business debt. You just gave a debt, and that's now completely worthless. I mean, sometimes when we call, please check the number that you have dialed, is what it says. I feel it should be, please check the person you have dialed. మీరు డయల్ చేసిన నంబర్ సరిచూసుకోండి అని వస్తుంది కదా. మీరు డయల్ చేసిన వ్యక్తిని సరిచూసుకోండి, మిమ్మల్ని మీరు సరి చేసుకోండి అని రావాలి. Sometimes we trust very easily, so we just have to be careful. Anyways, God provides. So let's put the heading non-business bad debts. Very small topic, okay? Non-business bad debts. Something so that you can feel good in the video. First point. It is deductible as green color, short-term capital loss. It is deductible as short-term capital loss. Regular color. In the year the debt becomes totally worthless. Next point. The amount that was given as debt must have been included in the taxpayer income. Must have been included in the taxpayer income. Next point. A taxpayer can amend, green color you write amend. Regular color, a priori return. To claim bad debts or worthless securities. Green color, within 7 years. Within 7 years, the debt or security becomes worthless. Within 7 years, the debt or security becomes worthless. So what you can do, if you have given a debt last year, you can go back and amend last year return as a short-term capital loss, or claim it in the year it becomes a non-business bad debt. That's it. Please go through what you have written. What you've written? Okay, stock basis. We have written stock basis. Then we wrote wash sales. Then we wrote worthless securities, and then we understood non-business bad debts. Enough, okay. So study on depreciation tomorrow. We will study about depreciation tomorrow, and with that we will close this section. Okay, and it will be fun reading depreciation. Account students, you will love depreciation. Okay, we have done the basis, how to identify. Okay, once again we quickly revisit the sections that we have done. Okay, very interesting topic. You and I are putting so much effort in studying this. Okay, if you have to read this from the publication and all, it's so difficult. Preserve your notes. Yeah. And whatever you have written in notes, I mean, in the iLead Tax Academy recently, I uploaded a video. I mean, I just shared somewhere. I saw, there's a boy with the book in the front and he's just taking this and putting on him. I wish, we had all this knowledge dumped in our mind also like that. Anyways, we try our best to ease the syllabus for you. Hope you are enjoying the learning. Okay, first we did types of property. Then we did basis. I'm showing you again and again so that you get familiar with this. It should not look new to you. Repetition is the mother of mastery. Yeah, you have to keep revising it, saying it again. Adjusted basis. Okay, we saw the 8 situations there. We did a case study. Installment sale, related party sale. Yeah, and then we came to section 4. We did. Subchapter 4, capital loss carryovers, set off and carry forward. Then we did sale of home there, sale of home exclusion. Yeah. Then 5th subchapter was property used in trade or business. There we discussed section 1231, 1245, 1250 property. Right. This is a good one. Computation of that net gain and loss, if sold for gain, if sold for loss. Then we gave the summary. Yeah, how it gets reported and all. Then we understood what is form 4797. Then like kind exchange we did. Then stock, shares and options we did, right? Stock basis. Then we did wash sale rule. In number 6, 6th subchapter was stock, shares and options. Here we did stock basis, wash sale rule, worthless securities, and then non-business bad debts. Okay, good. So tomorrow we will do subchapter 7 on depreciation. Okay, have a wonderful evening. Good night. Take care. Bye-bye.